is Monday after the bell, 5:30 p.m. What a day. We had some great follow-through. We've been looking at this for a long time, and we finally got it. Did we play it exactly perfect? No, we sure did not. I'm not sure anybody could tell this was going to happen. You can't tell the future, but it sure did take place rapidly. So we're going to go SPX on multiple time frames. Check out the VIX and see what's happening over there on SPY with the volume. And then we'll end the free video there. Go to our Patreon. It's only $5 for the first tier. And we'll check out QQQ IWM and see what's happening with BYND. See what we can learn from that today. All right, so let's jump into it. SPX on the daily trend is our friend. Let's go to that ending diagonal. Came out last week, pushed back up to the wedge or ending diagonal. Resistance in the 8MA, couldn't get it back above it. Pushed down, stopped right on the 50MA. They're not going to give it to you guys. They're not just going to hand it to you on a silver platter. So gap down over the weekend on a Sunday night into Monday morning today. And had great follow through. So we held our puts for Tesla, Nvidia, Amazon. They look like they were impervious, but you know, the market won't go down without taking everyone with it. So we did very well on those three in particular. And then later today we did jump into some calls, and that's why we're going to go on with BYND and check it out. But came down to the 100MA, the 100-day simple moving average had a reaction to it, and we'll go on to a lower time frame to see what's happening. But I do believe we're trying to do a zigzag into a ABC or 3-wave correction and a zigzag down. If I am correct with that, because our 382 is way down here, you know, I'm looking at getting a WXY of some sort, because I do think that we had our 5-wave move down, 3-wave move up, 5-wave move down, give our 3-wave move up and do the same thing, or maybe even a 5-wave move down at the end there to get us right to the 38.2, coinciding with this rising pivot here. So that game plan is still intact. We weren't sure if we were going to get this big move of what we're looking for, and so we're really looking good on our bearish scenario. So let's go down to the 65-minute chart. Again, we use 65 minutes to make every candle even for the trading day. So we'll pull out just a little bit more so you can see. All right, so we have our ending diagonal, wave 4, wave 5. At the end of it, a throw over. We had an impulsive move, even though it was really choppy. That's considered an impulsive move down, wave 1, 2, and broke down from that channel to wave 3. And now we're getting into wave 4 from what we think at this point. Now, there are other wave counts. What if this was a ABC correction that's done and we go to all-time highs? That's a bullish scenario. That is possible, but only time will tell. We are in a bearish state. I do believe we're going much slower. We didn't even hit our measured move for our ending diagonal, which is right here at the 41.65 area. So a lot of evidence that says we go lower, but how we do it is the name of the game. How you trade this projection down to the 38.2, down to the diagonal. We what seems to be the 3-wave down is complete. We're looking for this wave 4 possibly into the I'm not sure what's going to happen if tomorrow we just kind of chop around until Wednesday, and then Wednesday we make our move, last move down, and to fake everybody out to bounce to a 50% retracement and continue this zigzag down. That's possible. You know, there's a lot of scenarios that could happen. This, if we get up to the wave 4 and we break down into Wednesday of the FOMC, they say something that everybody thinks is bullish, they interpret it that way, get down to this 5-wave move, maybe even down to this rising pivot, the 23.6 retracement as well. They say the right things, and we break to the upside. That would give a lot of bulls confidence that we had a very shallow correction down to the 23.6 and also this rising pivot, and say, hey, we're going to all-time highs at this point. But in my opinion, that will be just a bull trap. We'll get down here, 5-wave move down, ABC up, and then another 5-wave move down to get us down further. And we can check that out as we go. So hit that notification button if you want this information throughout the trading week, and also a thorough one on the weekend. If you're interested in getting trade education and answering questions one-on-one, go to the Patreon and go to Options Center. It's $5 for the first tier. Or if you just want some free camaraderie with traders, hit us up on the Option Guys. That's all down in the description. We'll place it there. So, okay, let's go over to the VIX. VX, the VIX futures. We'll do that on the daily, just to get a better view. We've been chopping back and forth. Finally got some follow through here. Had a reaction right at this 27-ish area. You see that's a sort of resistance at that point. I do think that's a minor resistance midway through this channel, which is typical. We'll come back just a little bit so we can go to higher highs here and possibly to this 36 range high. Now, that would mean the market has to go down even further. So that would be another part of our zigzag there. All right, moving over to the SPY. Let's check out the volume, see if we had any follow through there. You see that huge volume node. It came over what we've had anything yet. We had a huge one the other day, but this was just a massive follow through with that, and sort of a capitulation type volume node. So, it's no doubt that we have that the bulls and bears fighting with that doji candle. So maybe this is this is it, and this is an ABC, and now we go to new highs. Or in my case, what we think we're going to do is just get a little bit of a bounce before we move a little lower, fake people out to think this is a bull reversal, head lower, and then look for our higher bounce there. So we are not oversold on the RSI. We are coming down to the zero line, which tends to have a bounce to it, but we're getting a little bit more bearish on the histogram. We're crossing through on the zero line, so now we're in bearish territory to where we can say we're actually in a bearish trend on the daily. Okay, so we do have this large gap. Maybe we start to fill that gap, but if we don't fill it right away, then that's very bearish, and we'll continue our bear trend to the downside. All right, so let's finish off with the SPX. Let's go over to the options expected move. See how we treated that last week. We didn't even move anywhere near what we needed to hit either side of the options expected move. And what did I say in the last video? We're gonna hit it, and we certainly did. We came through, bounced back up, but you see this line here. That's where we start. The white line is where we start off the week. Last week we didn't get anywhere. We consolidated, had a finish here right on Monday, hit that options expected move. So volatility is definitely kicking. We had a 94 point there, so where we started the week, 94 points to the upside or 94 points to the downside. We certainly hit that downside mark, and now it is probability that we close inside of our playing field that we use. If you're not familiar with options expected move, I do have a tutorial on that. I had enough free video. So that's it, you guys, for the free video. So thanks for joining us here, Options Center patrons. Stick around.